All right, today we are talking about Bitcoin versus paper Bitcoin. Very, very interesting topic that I'm personally very interested in as well. The differences and do you own Bitcoin or just IOU for Bitcoin? So very interesting discussion. The contrast between the real Bitcoin, which can be self-custodied, it's verifiable, it's scarce, versus paper Bitcoin, which basically means claims, derivatives of some kind, or custodial promises that may or may not be backed one-to-one. Anton, you want to kick us off?
Yeah. Let's kick off for everyone listening or watching this by just giving an example. What is actually a paper financial instrument versus not paper? So let's start with the great example of gold. If you really want to be sure that you're owning your gold, you have to go and physically take the gold from the shop, store it somewhere, and you're going to be 100% sure that this is your gold and you're owning it. It's the same with cash. Like you need to go withdraw your cash, put it under the mattress, and this ensures you are the owner of your cash. On the other hand side, there are so many platforms where you can go click buy gold, buy any stock, buy any financial instrument, but you can never be 100% sure that actually you're owning this the respective financial instrument or even the gold. Most of those platforms are offering contracts for difference or the so-called CFDs, and in 99% of the cases, you're actually not owning anything. You're just speculating with the price. And now, considering this for Bitcoin, which is actually the topic of our conversation today, when you buy Bitcoin, you have two options. Either you put the Bitcoin on a trusted custodian, or you just trust yourself. You assume all of the risk and all of the benefits of having self-custody, and you just deposit the Bitcoin to your cold wallet. Now, in this case, you're eliminating any risk of owning any paper Bitcoin. However, now with the ETFs, with so popular centralized custodians like Coinbase, for example, you cannot be 100% sure never that you're owning the respective Bitcoin. And let me give you an example. Do you remember what happened in 2022 with FTX? 80,000 paper Bitcoins. They were printing Bitcoins. Now, 80,000 Bitcoin, you can calculate according to the current prices, though this is like $9 billion of paper Bitcoin or just paper financial instruments. We can put it like this one. So this was crazy, and now one of the hottest debates on X or just across the Bitcoin community is whether there are paper Bitcoins or not. But I'm actually very eager to go and check different perspectives. I actually have some data I also want to share and just discuss if we believe paper Bitcoin is here or this is just like rumors of people being a bit disappointed that Bitcoin is not at 1 million already.
Yeah, and it's very interesting if you think about it's like why paper Bitcoin exists in the first place, right? Because like you do have anyone in the world can buy Bitcoin and put that Bitcoin on their self-custody wallet and they can really hold it. So why the paper Bitcoin exists in the first place is very interesting question. I think one of the things, probably the most important one, is definitely the convenience, right? It gives you easy exposure without dealing with wallets or private keys, without hassles of that, and you know the learning curve that is involved in learning how to store and hold Bitcoin securely over the long term. So convenience is the big one for sure. I mean, we've have had the same thing with gold, right? The like owning a physical gold is cumbersome, costly, expensive. Whereas if you own the IOU to gold certificate or some paper gold, so to speak, then you basically have uh you gotten rid of all those pains with storage of gold and making sure it's secure and safe and then transferring. And you know, transferring the ownership of that gold is as easy as giving you that paper and just getting rid of that paper, right? And giving that to another person. Now, changing ownership of gold like physical bearer asset and settling this, it's obviously more expensive, more costly, more cumbersome in all those dimensions. So convenience is by far the most important one, the most important reason why the paper Bitcoin exists. But I think there is also an aspect of financialization. Institutions, they in general, they love creating derivatives for trading, hedging, and basically having a physical bearer asset is not that effective, right? If you're sitting in London, you want to ship gold to New York or vice versa, it just takes, I mean, physically doing this, it just takes time and it's expensive and it may be insecure and like, and right now it can be just like paper Bitcoin can be just electronic IOU, which you can send in seconds over the ocean. And now all of a sudden you own this instrument, right? So, and finally, the demand, I think there is some customer segment, some specific investors that want only price exposure, but not actual Bitcoin custody on all the hassles that come with it, right? I mean, we see the institutional custody, it's quite secure, but it's pretty sophisticated setups, including MPCs, multi-sig setups, bunkers and what have you. Some investors, they don't want to take care of any of this, and they just don't want to think about this. The only thing they want is the price exposure, and they are thinking in terms of having the price exposure which is sufficient to that for them. So in that sense, paper Bitcoin and those kinds of instruments and derivatives is good for them because it allows them to get this price exposure without all the hassles of physical Bitcoin storage and custody. So if you're listening to this, you need to, think about whether you really want exposure to Bitcoin price only, or you want access to Bitcoin's power. So, the self-sovereignty aspect of it, the fact that you can send it around the globe, the fact that it's permissionless, that you don't need anyone's permission to send and to create transactions, right? The fact that you can run your own node and the fact that you can validate the transaction to yourself, the fact that it's censorship resistant, the fact that no middleman approval is needed for your transactions, the fact that you can memorize 12 English words, right? And upload your ownership to the brain. All of this is sort of all those superpowers are coming with when you hold real Bitcoin bearer asset and not the paper Bitcoin.
Yeah, totally agree. I just want to give a few comments on the convenience aspect. I see something slightly different here because you have a lot of new Bitcoiners that are just entering the game. For them, self-custody is a pain. It's not that straightforward to do self-custody on your Bitcoin. The first thing which people that are about to buy their first Bitcoin do is go on the exchange, create account, few clicks, deposit from their debit card, and that's it. They buy Bitcoin instantly. And then from there, they have to invest time to increase the knowledge to their understanding of how Bitcoin is working and what is the best way for them to ensure their Bitcoin will stay safe. A lot of people don't do it, and a lot of people just decide to trust the centralized custodian. And I'm not saying if this is good or bad, because we know that cold storage or self custody, there are some challenges also associated with this. For everyone listening, probably you're aware, but most Bitcoins have been lost because of mistakes with self custody transactions rather than hacks on exchanges, and that's like proven statistics. So there is some challenges with self custody, and it really depends on what the person wants to achieve. There is another aspect also which we didn't cover, and that's depending on the amount. Like if you have $100 in Bitcoin, you can easily trust the exchange. But then if you have $1 million worth of Bitcoin, are you going to trust your centralized provider? You're going to start challenging this. And then if you have $100 million in a Bitcoin, are you going to trust yourself that you're going to be the single point of failure and you're not going to make any mistake to lose your Bitcoin net worth? So there are those aspects depending on your net worth and your Bitcoin ownership. You may start challenging the self-custody versus a centralized provider. But overall, it really depends on your knowledge and how much you want to invest. And what I'm seeing right now is that people are not really investing time understand, to improve their knowledge about Bitcoin. And I think this creates a very, very good foundation for some exchanges and some bad actors to start creating paper Bitcoins. And we already have seen this in 2022 with FTX, where like one bad actor managed to create over 80,000 Bitcoins, which extremely impacted the price. Like we dipped below $50,000 simply because of, or let's say not simply, but this was the main factor why the price decreased so heavily. But for everything else you mentioned, yeah, I totally agree. Like depends on the purpose of the purpose of why you actually bought this Bitcoin. And then I want to have another topic raised here related to what's the danger of paper Bitcoin. Is it only the price that can be impacted, or actually there is something much bigger? For everyone thinking, okay, I don't care, I just go to exchange, I buy Bitcoin, like I speculate with the price. I don't fully understand the value of Bitcoin. I just want to invest $10,000. I want to make it 20,000 within 1 month. Then I just sell and I leave. I don't care if it's CFD, if it's paper. I just don't care. But think what will happen if the exchange or the counterparty just disappear tomorrow. Like you're not going to have any protection of your wealth, and suddenly your $10,000 may worth zero, even if the Bitcoin price double within your time horizon. So that's what we saw with FTX. That's what we saw with the Japanese exchange a few years ago. You can literally like lose your Bitcoin if you don't pay enough attention to where you are actually putting your Bitcoin to stay. And then another risk which we should not underestimate, this is the leverage risk, because usually those exchanges are using, they're lending your Bitcoin, and some of them are even lending their Bitcoin to get US dollars and then buy more Bitcoin to speculate with the price, which this strategy is working when we are in a bull market, but this can definitely, and it's not, it's proven that it's not working during bear market. So your Bitcoins, even if they didn't like created paper Bitcoin, they can simply disappear without any notice. What's your view on the dangers on the paper Bitcoin in general? Like I highlighted the counterparty is the leverage, but yeah, what do you think on this? Because I'm sure some people will say, I don't care, like I just buy, hold, sell, paper or not, I make money. And that's like we know this is working for some stocks, for some currencies. Like people are fine with not owning the real asset. But yeah, what's your take on this?
Yeah, and it's fine, but you just need to know what you're doing, right? Because as you said, there are some dangers of paper Bitcoin, including, counterparty risk. You mentioned the over leverage risk, but there's also this aspect of the centralization creep, right? That for example, those ETFs where Bitcoin is being bought by BlackRock and is being in a Coinbase custody, and that's fine. But at some point, they own so much Bitcoin, then they may pose some kind of systemic risk if something was to happen to that Bitcoin, right? And it concentrates the power into the really few entities and the organizations like BlackRock, like Coinbase, right? I I would really also say that the illusion of ownership that you get where you have this paper Bitcoin, because like that's a difference between holding a gold bar versus holding a gold ETF. Right? I mean, yes, you get the price exposure and it's very easy and convenient because it lives in your brokerage account and you can see it, but it's not the same. It's basically not the same. One is really virtual, the other is very physical. One is better asset, the other is not. What the holding the gold bar, you don't, as long as you hold it in your hand, you don't need anyone's permission. Whereas in gold ETF, I mean, your account can always be suspended for whatever reason, right? They can just deactivate you, etc., debank you. So it's very clear trade-off that you're making. And as anything, there are no silver bullets. It's just the trade-offs and the what are we willing to trade for what, right? I also wanted to maybe emphasize a little bit, if you look from the macro impact that this is having